You're here because you want the essentials on what's changing the global economy. Fast. No jargon. Consider this your shortcut. Today, we're diving deep into foreign direct investment FDI, our guide, a really insightful piece from cognitive market research.
Yeah, and FDI, it's more than just, buying some shares overseas. It's about a company actively investing in operations abroad. Think building factories, buying local firms, having a real physical presence.
Exactly. So our mission today is to unpack why companies do this, how it actually works, the key bits involved, and the potential roadblocks. We'll also touch on market research's role and some new trends, all drawing from that cognitive market research source. It gives us a great framework.
The source lays it out pretty clearly. The motivations, the process, the components, financial and physical, the risks, how it
Yeah.
connects to market analysis, and yeah, what's new and changing. It's quite comprehensive.
Okay, let's get into it then. What are the main reasons a company goes down the FDI route?
Well, the source really highlights growth. I mean, getting access to brand new markets, new customers, and building up different income streams. Like, picture a European car maker putting money into a new plant in Southeast Asia. Huge growing market for cars there. That's FDI chasing demand.
Right, expanding the footprint. And there's also that idea of not putting all your eggs in one basket, isn't there?
Precisely. Diversification is huge. Investing across different countries, it makes businesses less vulnerable if their home market takes a hit. So if one region's in recession, maybe their operations elsewhere can cushion the blow. Same with, political uncertainty in one place, less likely to sink the whole ship if you're spread out.
And it's not always just about finding new customers, is it? Sometimes it's about what you can actually get in those other places, specific advantages.
Oh, absolutely. Grabbing strategic assets is a big driver. That could mean getting hold of some unique tech, like a patent from a foreign company. Or maybe it's the local team's deep understanding of the market, their expertise, even intellectual property. It's all about boosting innovation, getting more efficient by using resources you might not have back home.
Okay, so the benefits for the investing company seem clear. But what about the countries receiving the investment? What's in it for them?
Ah, yeah. Host countries can see some major upsides. Job creation is a big one, obviously.
Hmm.
New factories, new offices, they need local people. Then there's technology and know-how transfer. Foreign firms often bring in advanced tech, better ways of managing things. FDI can also kickstart infrastructure development. Maybe the investment includes upgrading roads or power grids nearby. And ultimately, it brings in capital, stirs up competition, which can mean better, maybe cheaper, goods and services for everyone there.
Okay, so a company thinks, right, FDI is the way forward. What's the actual process? How does it, unfold?
The source maps it out pretty well. It always kicks off with really deep market research. You can't just jump in blind. They have to properly check out the economic stability, the rules and regulations. Are there loads of hoops to jump through? Is there actual demand? Who are the competitors already there?
So a serious amount of homework up front.
Absolutely critical homework. Based on that research, they then put together a strategic plan, a detailed investment proposal. This nails down their goals, the scale of the investment. Like, are we talking huge factory or just a small sales office?
Yeah.
The expected financial return. And crucially, how they'll enter the market, set up a brand new subsidiary, buy an existing local company, or maybe team up in a joint venture.
Right, and then comes the maybe less glamorous but essential part, the talks, the negotiations.
Exactly. They have to talk to local partners, government bodies, other stakeholders, getting the right permits, the approvals, making sure they're following all the local laws,
Yeah.
from taxes to employment rules. Setting up the legal and operational side correctly is key for things to run smoothly.
And then finally, the investment actually happens. Boots on the ground, money flowing.
That's when they actually set up shop, put the resources in place, money, people, and start integrating into the local scene. But it doesn't just stop there. They need to keep monitoring, keep evaluating. Are they hitting their targets? Does anything need tweaking because the market's changed? It's a continuous thing, really.
We've done the why and the how. Let's look inside the box now. What are the actual core components of FDI?
Yeah, the source breaks it down into three main financial bits. First up is equity capital. This is the direct cash injection for ownership in a foreign business or setting up something new. It shows they want a real stake, control, or at least significant influence.
So that's the main commitment, showing they're serious players.
Pretty much. Then you've got reinvested earnings. These are profits the foreign operation makes that don't go back to the parent company. Instead, they get plowed back into the local business, maybe for expansion, upgrades, whatever. It helps fuel growth right there in the host country.
Okay. And the third part of that financial structure.
That falls under other capital. Mostly, this means loans and other financial flows between the parent company and its foreign branches. It just
Uh,
helps move money around efficiently for day-to-day stuff or specific projects. And beyond the money, the source also reminds us, FDI usually involves physical things too, the actual buildings, machinery, tech, equipment they bring in or build there, tangible assets.
Okay, it can sound all positive, but the source is clear there are also risks, limitations with FDI. What are some of the main potential headaches?
Yeah, definitely not always smooth sailing. A big one is exposure to political and economic risks in the host country. Sudden policy shifts by the government, economic downturns, political unrest, all that can seriously hurt the investment's profitability, even its security. Like, imagine tariffs changing overnight, making imported parts way more expensive for your factory there.
That makes total sense. You're playing in someone else's sandbox, so you're subject to their rules and their stability or lack thereof.
Exactly. And the source points to regulatory hurdles, too. Just figuring out and complying with different legal systems
Ooh.
can be costly and take time. There's also, though less common now maybe, the risk of expropriation, the government actually taking over your assets. And currency fluctuations are always there. The exchange rate moving against you can eat into your profits when you convert them back home.
And it's not just those big picture macro things, right? There can be challenges right there on the ground locally.
For sure. Cultural differences, operational styles, they can be real stumbling blocks. Different ways of doing business, different laws, what customers want, it all requires serious adaptability. Just fitting into local supply chains or figuring out how to sell effectively can be tricky. The source also mentions potential pushback from local communities. Maybe fears about local jobs being lost or environmental concerns. You have to manage those local relationships carefully.
But the source does stress these risks aren't insurmountable, right? They can be managed.
Absolutely. The main point is that doing your homework, thorough risk assessment, and having solid strategic plans are vital. It's about mitigating those downsides, upping your chances of success.
Let's connect FDI with secondary market research. For some folks, that link might not be immediately obvious.
Yeah, but it's actually fundamental, according to the source. Secondary research, remember, is using existing info reports, studies, government data. It gives you that big picture view, market trends, a country's economic health, who the competition is. Think of it like building an intelligence file before you even think about committing resources.
Like doing reconnaissance before setting in the troops.
Exactly like that. This research helps companies spot markets or sectors with high growth potential. It lets them understand the key economic factors that could affect their investment. What's the forecast for industry growth? How much are people spending? What are the trade rules like?
Okay, so once this research flags a potentially good market, how does FDI use that info to make actual decisions?
Well, it takes that broad understanding and uses it to zero in on specific opportunities. The secondary research gives you data on market size, growth projections, who the main players are already. This helps the company narrow its focus. Say the research shows a boom in demand for green energy tech in a country, but not much local production. That's a strong signal for FDI in that area. It also helps figure out the best way in. Should they partner with a local distributor, buy a local manufacturer, or build everything from scratch?
So the research isn't just, is this market good? It's, what's the smartest way to get into this good market?
Precisely, and maybe most importantly, it helps gauge the overall feasibility. It uncovers the potential risks, the barriers. You get insights into the regulatory scene, economic stability, how tough the competition is. This lets companies anticipate problems and plan ways to handle them. It's really a partnership. Secondary research gives the context. FDI strategy uses that context to hit specific goals. Leads to much smarter decisions, hopefully more successful ones, too.
Okay, we've got the why, the how, the what, the potential problems, and the prep work.
Yeah.
Let's look forward now. What are some of the big trends shaping FDI's future based on our source?
Yeah, this is where it gets really interesting. The source highlights a few key shifts. A major one is the surge in FDI going into tech and digital stuff. We're seeing much more investment in things like AI research hubs, cloud computing centers, fintech companies. It's all driven by this huge digital transformation happening everywhere.
Makes total sense. Everything's going digital, so investment follows. What's another big trend?
Another significant one is the real focus on sustainable investments. Investors are putting more weight on projects in renewable energy, things that meet high environmental, social, and governance ESG standards, low carbon infrastructure. This is pushed by, climate change goals globally and just more awareness. You might see a big company investing in a huge solar farm in a developing country, for instance.
So it's moving beyond just the bottom line to look at wider impact.
Exactly. The source also talks about reshoring and nearshoring. Because companies want more reliable supply chains, we're seeing more FDI going into places closer to home.
Yeah.
Think Mexico for the US market, Eastern Europe for the EU, Southeast Asia too. Being geographically closer to major markets is a big plus now for supply chains.
Yeah, we've definitely heard a lot about shortening those supply lines,
Hmm.
reducing dependence on faraway places. What's the last main trend the source highlights?
That would be the growth in public-private partnerships, PPPs. We're seeing more joint investments tackling big infrastructure projects, transport, energy, also developing smart cities, improving healthcare. Often these are pushed along by government incentives, aiming for broader national development goals. It's about pooling resources for big, complex stuff.
Right, so a real mix. High-tech focus, sustainability drive, rethinking supply chains, and more big collaborative projects. That paints a fascinating picture of where FDI is heading. Now, before we wrap up, our source included a fast fact. What was that key takeaway?
Ah, yes. The fast fact from the World Investment Report 2024, it points out that global FDI actually dipped slightly last year, down 2% to $1.3 trillion. The report suggests this was due to the global economic slowdown and rising geopolitical tensions.
That's a really important point. Even with all the opportunity and exciting trends, FDI is still very much tied to the bigger global economic and political picture.
Exactly. It just underlines the importance of that risk assessment, understanding the global context we talked about earlier.
Okay, so wrapping this up, we've looked at how foreign direct investment is a major tool for growth, for diversification, helping both the investors and the host countries. It's a complex process, right? With key parts, definite risks, but manageable with good research and planning. And we're seeing some really interesting new directions. Tech, sustainability, supply chain shifts, driving things forward.
And thinking bigger, understanding these FDI dynamics is just crucial for anyone wanting to get a handle on our interconnected global economy and the big strategic moves shaping international business.
So as you think about what we've discussed today, here's something to chew on. How might the accelerating pace of tech change, combined with shifting global power dynamics, reshape the world of FDI even more in the years ahead? What new opportunities or maybe new challenges might be just around the corner?
That's a great question to ponder. A lot could change.
Thanks for joining us for this deep dive into foreign direct investment. We'll catch you on the next one.